The IMF chief economist Pierre-Olivier Gourenches warned the situation remains fragile and downside risks predominate. The fund is forecasting 70% global inflation in 2023, up from its January forecast of 6.6%. The persistence of high inflation is expected to force external banks to continue raising rates, potentially weakening economic growth and stabilizing banks.
In our latest forecast, global growth will bottom out at 2.8% this year, before rising modestly to 3% next year, almost unchanged from our January projections. Global inflation will ease, although more slowly than initially anticipated, from 8.7% last year to 7% this year and 4.9% next year. This year's slowdown is concentrated in advanced economies, where growth is expected to fall to 1.3% this year, before increasing modestly next year. By contrast, emerging market and developing economies are already pushing ahead in many cases.
The IMF is recommending the policymakers to consider adjusting the pace of interest rate hikes to support financial stability. The fund foresees 25% likelihood of global growth falling below 2% in 2023 and a 15% possibility of severe downside scenario associated with global recession. The United States and Europe has shown greater resilience than expected despite higher interest rates and the shock of Russia's invasion of Ukraine. The IMF has modestly upgraded its outlook for these economies, with the US expected to grow 1.6% this year and Europe 0.8%. However, the IMF downgraded growth prospects for developing economies including India, Latin America, the Middle East, Sub-Saharan Africa and less developed countries in Europe. Ukraine's war-ravaged economy is forecast to shrink by 3%. The IMF's latest World Economic Outlook highlights the fragility of the global economy and rising risks to financial stability. The persistence of the high inflation and the need for central banks to continue raising interest rates is expected to weaken economic growth and potentially destabilize banks. Policymakers may need to adjust the pace of interest rate hikes to support financial stability. The outlook for developing economies is particularly challenging, with the IMF downgrading growth prospects for several regions.